Welcome to Small Caps, ladies and gentlemen. My name's Kerry Stevenson, and with me is Gareth Soloway on a day which has seen a lot of chaos. Now, here in Australia, it is a public holiday. It is the 21st. I think it is the 21st of September here, or maybe it's the 22nd. Goodness me, I'm getting really confused here, Gareth. Just gonna, yeah, no, it's the 22nd. I'm behind, 21st where you are. I'm with Gareth Soloway. He's the Chief Investment Officer for inthemoneystocks.com. Really deep technical analysis. We've spoken with Gareth before. Gareth and I were actually going to speak yesterday, and then we realized that the Fed was going to come out with its announcement, which it's done just a few hours ago. So this is literally hot off the press of Gareth having a crazy day. The markets have been all over the place. I'm feeling chaotic, if that's a good way to say it. Gareth, welcome back. Good to see you.
Good to see you too.
Fed's raised by 75 basis points, but it's playing hardball in a way for the future.
Yeah. So I think that's the big thing. And this was a shock to the US equity markets, is you basically got the 75 basis point hike, which everyone expected. That was not a surprise. But the statement was unbelievably hawkish, in fact, guiding the market that they're even going to continue to be aggressive into year end, basically upping where they're saying interest rates will be by year end. And that shocked the market. And this was such a wild day because that statement alone dropped the market precipitously. We saw about a 2% drop in the S&P in the matter of 20 minutes. Then Jerome Powell did his press conference. And in the press conference, he kind of was ever so slightly open to letting economic data dictate. And all of a sudden, the market just ripped higher. And we saw the markets go all the way to new highs of the day. So now we've rallied basically up 3% to the upside. Now, all of a sudden, the market started to redigest what he's been saying. And they're like, wait a minute, we're not going this way. And the market sold off and made new lows of the day, basically dropping over 3%, ending at the lows of the day. It was a day for the ages. And I'll show you guys here what the chart looked like on an intraday basis. This is the 10-minute chart. You can see starting here, it was real quiet. So all day long, everyone was just waiting. Here's where the statement came out. And so we were up on the day. This is where we closed the previous day. So the markets were up. We sold off from 885 down to 820 on the S&P. So, I mean, that was a big drop, $65 drop or 65-point S&P drop. We then rallied all the way back above 900 to 907 and then closed down at 3789, 3790. So one of the wildest days I have seen in the equity markets in terms of whipping the markets. And again, it sets us up for just probably a pretty crazy day tomorrow where the markets are trying to really figure things out.
Can we figure things out? I mean, you said the Fed's hawkish. Where to from here?
Yeah, I mean, this is the kicker, right? And I've said this before. I think the Fed to me has always been behind the curve, whether it's when they're printing money when they really shouldn't be, or when they're tightening out of panic because of inflation in this scenario. And I really, if I could talk directly to Jerome Powell, I would say be very careful here, because now you've raised 3 times in a row 75 basis points. You're guiding that you're probably going to raise another 50 in November at least, maybe another 25 into December. And we haven't even seen the full effects of the higher rates yet. Right. So the economy still hasn't digested all of that. And you have to be careful here, because with interest rates, rising and inflation still high, if we go into a bad recession, and let's say we go into a global recession, which it looks very possible we will, how do we get out of that recession? If you think about it, every past recession, the Fed's printed us out by lowering rates, quantitative easing. But with inflation at, let's say, even if it comes down to 4%, they're not going to print us out. They can't, because it would send inflation soaring again. So it's a very tricky scenario. And I think the market is starting to be really nervous about that aspect.
How do they get out of it? It's almost like they've kicked the can down the road so far that now the cliff face is here and there's nowhere for them to go.
That's the worry that I have, is that they're going to put themselves in this box by over tightening too quickly. By the time all of these rate hikes kind of are digested in the economy, then they're going to find out too late that they've sent us into a bad global recession. And then at that point, we're going to all look to them and say, oh, can you guys print? Oh, wait, we can't print money because inflation is still elevated at 4%, let's say. So it's a really scary scenario where we could see, in my opinion, it's very likely we'll see a protracted, like a long-term bear market that could last for 5 to 10 years. And it just could be nasty. I mean, it's a scary scenario. I think you still got to think about gold as the kind of a safety play here. We'll talk about that obviously in a little while.
Yeah, we will talk about gold in a little while. It'd be interesting to know, how has the crypto market reacted, or is that just sitting on the sidelines for the moment? Because last time you and I spoke, you called 19,000 Bitcoin, but you also said you were waiting for it to get to 12, which is another scary number. And I'm just wondering, it feels like we're all going to be wiped out. You know, it's the old Klaus Schwab, you will own nothing and you'll be happy.
Yeah, right. So nothing's changed, unfortunately. In fact, the hawkishness of the Fed is exactly what Bitcoin doesn't need right now, and it's pushing it lower. So if I show the Bitcoin chart here, what we can see is that you've been hammering on this level over and over again. This is back in June, in late June, or excuse me, this was, June, in early July, in mid-July, and then over here in September. And look at what's happening on this candle today off the Fed. It looks like we're starting to break lower. Now, we will have a little support at the June low of 17,500, but if that gets broken, then there's not a lot of support until you get to like 13 to 12,000. And I think it's looking more and more like that is going to be the ultimate outcome here.
So if you were to be looking at the moment with Bitcoin, because some people, Gareth, are turning around saying Bitcoin's had its day, it's going to go to zero. Do you think Bitcoin still has a place in a portfolio?
Oh, yeah. So for me, there's no question that it will exist. The question is, how long does it take to get regulation out there where institutions start to feel comfortable investing in it? So there's always going to be this need and this trust that Bitcoin, there's a run of 21 million. And so therefore, it's not the fiat currency that is the US dollar, is the yen or the euro or any of these other currencies that the governments can just print nonstop when they want to stimulate. And so I think you have to look at it like that. And you have enough big money, you know, the Michael Saylors and a bunch of other players that have drawn enough attention to it. And then you have countries like El Salvador that have adopted it as kind of a currency there. I do think that it will survive, but it's going through its dot-com bear market, right? So if we think back to the dot-coms, you know, you had the Amazons of the world. That stock went from basically 112 to about, I think it was about $6 or so. So a 95% drop. And it's very likely that we're going to see that on Bitcoin. The fact that people are saying, they're beginning to say, oh, it's not going to be in existence anymore, that's exactly what I want to start to hear, to believe that we're close to a bottom. I don't think we're at the bottom yet, but when you hear more and more people saying that, because by the way, they said that in 2018 as well, after the highs in 2017, it was 20,000, it went down to 3,500, and you had tons of people saying, oh, forget about it, it's old, it's done. And then what happens? It goes to 69,000. So you look for those contrarian indicators. And again, the belief is there's enough young people, especially, that understand the fiat currency issues out there. And they are into the digital age now, where they're not just looking at gold, but they're looking at these other currencies, essentially cryptos.
Couldn't central bank digital currency, which obviously China has been doing for the last couple of years, and there's talk of central banks rolling this out in the near future, does that give a little bit of pressure to something like Bitcoin, where it becomes irrelevant because everything's going to be this central bank digital currency, which I find incredibly scary?
Yeah, so to me, it's not so much of a concern because, a digital currency is still a fiat currency in that the Fed can then just click a button, kind of like they do now, and probably just print another $1 trillion or €1 trillion or whatever. And so the allure to me for Bitcoin is that it's that digital gold. So gold is a great, awesome commodity. I own a fair amount of physical. I'm invested in it currently as an investment via the GLD. And I like it because of that aspect. It's kind of a safe haven aspect. And I think that Bitcoin is becoming more and more of that. So it's going to kind of separate itself. And then if you look at where Ethereum is and where some of these other cryptos are, they've got a big use case, right? They're being used for things, building platforms on top of platforms. And I think that's the key too, is I want to actually see Gary Gensler kind of come out with okay, these are securities. Okay, they're securities. That's fine. Make them do legitimate reporting, legitimate like audits. I want to see that. That's transparency. That's a good thing. I'm not so concerned about the decentralization getting kind of taken away because they have a use case. And so to me, like an Ethereum is almost like a Google or a Apple. And I think that's what it becomes, of more of a security, while Bitcoin is more the digitalized gold. And then you have the central bank currencies, which are just created to kind of do transactions back and forth. And the government obviously still has control of that.
If we can, we've talked about Bitcoin a little bit. I just want to go back because this is a momentous day with the Fed coming out with that 75 basis points. And we've touched on that and what you said, these wild swings. Because Australia tends to follow the US, it takes its thinking from there and goes, oh, that's, and I think we're going to open lower down here. What do you think going forward? Are we going to, you said potentially a bear market for five years or more. Is it time for people to exit the market? I mean, is it dangerous right now?
So, I'm never a proponent of after big drops exiting. It's, you want to wait for the bounce. You want to buy things that are on sale. So for me, if I'm looking at the S&P, and we can look at the S&P chart here, is that certainly it was a nasty sell-off. You could almost see the writing on the wall, and I'll show you how the charts kind of told us that we were likely going to see some downside. So if you take this low from June and you connect it to this secondary low, which is in kind of July, look at how it connects perfectly right through. So pivot low, pivot low, pivot low, and look how you broke down just before the Fed. So you had a break of that trend line. So what that tells me is that the market was going to likely head lower. The question is where to? Near term, I think we're probably headed back to the June lows, which is only about 150, 160 S&P points lower. So that is a big move, don't get me wrong, but that will be a big sticking point where you get a big bounce. I'm going to look to buy stocks into that level for a technical bounce. Now, I'm not going to hold them long term, but I'll hold them for a few weeks, get some nice bounces off of them in this environment. But I do think down the line, you are headed towards this pre-COVID high from February of 2020. That will be that target. I do think there's a chance by year end we get there on the charts of the S&P 500. And by the way, one other thing I'd mention here, a lot of people comparing Volcker, what went on in the 80s to what went on now. To me, what scares me the most about that is that when Volcker hiked rates, he went from like 12 to 18%, somewhere in that vicinity. And you could say, okay, that was a massive 6% move up in interest rates. But where were you starting from, right?
Yeah,
you were starting from 12 to 18. And so it was basically like a 50% move. If you look at where the US interest rates were, they were at zero. And you've hiked them now from zero to 3.15. And you're talking about, the percentage and therefore the impact on the economy is going to be exponentially greater than during Volcker's rule. And I think, again, if Jerome Powell's listening, be really careful because you are opening a can of worms here that it's not going to be easy to get out of.
Does the government come into play at all? Because you've got don't you have midterms coming up very soon?
Yeah, so that definitely comes into play a little bit. I know that here in the US, they passed some new legislation, which was stimulative. So needless to say, that's probably not great for the inflation side of things, for the spending. But I think that midterms, you likely will see some bounce going into the midterms. If you think about it, people are not going to be happy voting for the Democrats that are in power if the market goes straight all the way down. Let's say we're down another 10 or 20% going into the midterms. That's not going to fly. So that's why I think Right now, we're far enough away. You're getting some downside, but then right around the midterms, I'd say by mid-October, definitely look for a bounce into early November. And then we'll have to see into year end. A lot's going to be determined on that, the CPI data, the consumer price indexes, where do those come out? And does it shift the market's view of what the Fed has said in terms of, oh, we got to raise rates a lot more. If all of a sudden CPI starts coming in and the economic, let's say the jobs numbers start to decline, get worse and worse, then you'll see a different tune from the market. And the market will actually rally on that, which is kind of crazy. A weaker economic picture and the market would actually rally.
Is the Fed going to continue tightening? Because I know that they were tightening at 45, I think it was US $45 billion a month, and set to go from now to 95 billion. Is that still the case, Gareth?
Yeah, you're talking about the quantitative tightening going on that they're unloading. Yeah. And that's one of the main reasons why I was pretty firm on the 75 basis points. There were some people out there calling for 100 basis points, but remember that starting September 1st, they began quantitative tightening, which is basically dumping their balance sheet, which is another form of tightening. Right. So if you think about it, by doing 75 basis points plus quantitative tightening, it probably equaled 100 basis points of tightening right there. And so again, even that, I was even like, oh, that makes me nervous about doing even 75 with the quantitative tightening, but they went ahead with it. I mean, they are gangbusters going forward with this. And I think that, again, freaks the market out.
The Fed, do you think they always look at the data, don't they? But the data is backward looking, not forward looking. Do they need to start to change the way they look at things and start saying, we got to look at the impact going forward rather than the data going backwards?
Yeah, I mean, that would be ideal. I mean, they've used the jobs numbers as kind of a point for why the interest rate hikes are okay. But we know that the jobs numbers are the lagging indicator that they are. So, for instance, we probably haven't seen the jobs numbers yet from even the first 75 basis point hike that was done months and months ago. So I do think that, again, they're smart enough to know that. But from what I'm getting the sense of is that they are like John Q. Public, and this is so scary, frankly, but they're John Q. Public that is getting emotionally worried about how high inflation is. So they're overreacting now. They're not trying to say, okay, let's do this measured approach. They're like, all right, we got to get this inflation down as soon as possible because people are suffering. And it's true. People are suffering because of inflation. But again, you don't want to get inflation down, but then crush the economy into depression at the same time. Like there's a way you have to do it, and you have to do it really carefully when you don't have the bullets in the gun like you had when inflation was sub 2%.
The US dollar has been incredibly strong and continues, and it goes back to Brent Johnson's dollar milkshake theory, where it feels like all the other currencies are being crushed and the US dollar is just continuing to rise. What are your charts telling you about the US dollar? Because poor old Aussie dollar down here is looking a bit weaker.
Yeah, and the dollar, you're right. I mean, just an incredible move. I think now you're close to like 17% just in 2022 in terms of upside in the DXY. So let's take a look at the chart and just see what we have. So the first thing that jumps out at me is that in terms of the up move here, this is from 2021, right? Look at that vertical move nonstop. This is the weekly chart of the DXY. It has just been ripping higher. Having said that, what you're going to start to look for is, kind of like what over here could put a top in the dollar. I do see a little bit of a pivot right here. And again, let me put a trend line in there. And again, this is just a little bit of a pivot where it could cause a pullback. We're just about into that little low. But if we get through that, then this would be your next stopping point at 120 on the DXY. Now, I'm in the camp that there are so many bulls on the dollar that we're probably nearer a top than not. So, for instance, it's making me want to accumulate more gold down here because if the dollar falls, we'll see gold actually react relatively well. And also, it does make me think that if we flush down to those June lows on the S&P, then if the dollar falls at that point, you might see that reflex bounce in risk assets like stocks out there. So I mean, this is an incredible move right now. I mean, think about this. In 2021, the average Bitcoiner was saying, oh, you got to own Bitcoin because the dollar is going to collapse.
I
And
remember
then
that.
what does the dollar do? It rips up like nothing else. And there's no better place to have your money than in US dollars, really. It's just kind of ironic how that works. But always just be aware of that. When the crowd is telling you something, start to kind of get on the other side or start thinking contrarian. And that goes for the dollar now. Everyone's just like, oh, the Fed's going to continue to raise forever. The dollar's going to keep going up. That's starting to ring bells for me that we're getting close to an inverse move in the dollar.
Do you really think that the dollar could reverse its strength? And what would be the catalyst to make that happen?
So the catalyst is going to be the pivot. Whenever we get to that point, so basically you have to watch economic data at this point. We don't have a Fed meeting now for I think 2 months till November. So I mean, you're going to have a lot of data. You're going to have the jobs reports for the next 2 months, CPI numbers. And so what you're looking for is a weakening economic picture that would give the Fed that reason to pivot. And as soon as we see that reason occur, the dollar will top out at that point, and you'll see way too many bulls that are now panicked, and they'll start selling US dollars, and they'll buy euros, they'll buy yens, they'll kind of reverse that trade. So really just keep an eye at this point on the economic data.
You just mentioned the word contrarian, and I speak to a lot of people who say, when people are not watching anything, like let's just say oil, gas, uranium, whatever, when everybody's going one way, look the other way. Are there particular sectors, and we'll get to, I want to get to the gold and the precious metals thematic, if you like, towards the end. But for now, taking that bit aside, because I look at those as true money, in terms of the markets, are there any sectors that Gareth is looking at and saying, even with the Fed hiking and the markets being a bit wobbly, here's a couple of areas that will weather the storm?
Yeah, I mean, so that's a great question. And, there are certain tech stocks, not the big cap, large cap techs to me are still too expensive. The Apples, they're still trading at valuations that just don't quite make me feel comfortable. But there are some of these other ones, the Rokus, the SEs, that are getting to levels where you say to yourself, okay, now it's trading at a reasonable level. And, I could show you a couple of these charts, and then I'll give you one more sector that is kind of my secret sector going into the midterms. But like if we look at Roku here, Roku, you can see Roku.
Yeah.
So Roku is basically a stock that they have like kind of a media issue, like for TVs, it's a plug-in. You can get lots of different. It's a little, you can just look it up. But the bottom line is this stock was trading at $500. It's now down to $64 basically.
Wow.
Now again, not to say it can't go to 50 or 40. But you're at the lower end where the valuation starts to make a little bit of sense, and where a pop could be very quick back to $100. And that would only be back up to here, not very much. Now, again, as I said, in a bear market, these things can go a lot lower. But, it's starting to get my attention. And my secret play, and I have to divulge, I do own some of this. My secret play is MJ, which is the marijuana ETF. And my kicker for this, so number one, look at this chart. This is the ETF. It's basically at all-time lows. And my thought process here on this is that we're coming into the midterms, both sides of the aisle, Republicans and Democrats, they're going to look for those extra votes. And I wouldn't be surprised if you start getting chatter about, hey, if we win, we're going to look to legalize marijuana in the US. And just that alone could be a 20% move in a day on something like MJ. So again, risky, absolutely. But these are the types of things I try to think out of the box for, in terms of saying, okay, it's at dead low, so nothing's priced in. If I could just get a couple politicians to say one thing about legalization, 20% gain right there. And again, as full disclosure, like I said, I do have a position in this, but it's just those type of thought process. Think ahead of the group about what could happen. And when something's trading at these discounted levels, you start to nibble just a little bit.
I love that. You start to nibble just a little bit. I thought marijuana was legalized in the US.
So states have legalized it, but the federal government has not. So it basically makes for a very tricky situation, because a lot of a lot of banks won't do business with marijuana dispensaries. And so it's the idea is if they can legalize it at the federal level, then it opens up a whole new ball game. But right now, the marijuana business in the US is very much cash based because banks really won't touch it because it's illegal federally.
That's really interesting. My last question on that was, is that the reason for the weakness in the stock? Because that chart showed that it's just been under enormous pressure. And
yeah,
how does a company survive being under that sort of pressure?
Yeah, so this is an ETF that basically tracks a group of stocks. But yeah, I mean, just the fact that the companies have been losing money, I mean, because it's not federally legal, and they've been struggling. The price of marijuana has been dropping quite a bit. So it's kind of like the worst of all case scenarios. But as an investor, that's actually where I look for value, where it's as bad as it potentially could get. Now just show me some little positive and boom, it can take off.
Well, we really appreciate you sharing the little the Gareth Soloway secret today. So there you have it, ladies and gentlemen. There's a secret from him today, and that's what he shares with his subscribers as well. Just to let you know, I did ask Gareth, can't we have just a little tidbit? But that's the sort of thing that Gareth shares with his subscribers. So if you want to subscribe, please go to inthemoneystocks.com. But Gareth's also got verified investing stocks, which is another sector that you can get involved with. But Gareth, oil and gas, is there, because we are in an energy crisis, whichever way you look at it, the world is getting more electric with all sorts of things, but this green technology, it's not enough for the amount of energy that we need. So the coal stocks and the oil and the gas, are you looking at those closely at the moment?
Yeah. So, one of the things that's so interesting is that oil, a couple months ago, oil was trading at $120 a barrel. Everyone was saying it was going to go to 150 to 200, right? And I think even one of the last times we discussed it, I said, well, everyone's saying that. So what is Gareth going to do? He's going to say it's going to go the opposite way because,
you did.
Because when everyone's pumping something, it's usually wrong. And one of the thesis for my thought process is not just that, but it was, well, number one, I knew Russia was still going to sell their oil, right? So they were still going to sell their oil. They're just selling it to China and India at a discount. Number two, if the global economy is weakening, which all these rate hikes are doing, well, guess what? There's less demand. So, I mean, all of the things were lining up to kind of create a weaker price in oil. And oil has absolutely come in here. And if you take a look at this chart, what's kind of crazy about this is oil is hammering on this major trend line, and it looks like it's trying to break. And if it does break, you got downside to about the 65 to 70 level. And that would be remarkable in terms of thinking about reduction in inflation, even, if you get oil down, let's say it's 65 or $70 a barrel, down from $120 just a few months ago. So again, you can see how it's peaking just below this line here. I still want to see what it does tomorrow, but it might be on the verge of breaking down. And then the other thing is, I mean, this is just mind blowing, but natural gas, we all know what's going on with Europe, with Russia cutting off Europe from natural gas. But what was remarkable about this is the chart here has actually broken down. And so the chart is saying that natural gas is actually going to go lower, which is kind of counter thought process to what the Europeans are thinking and what a lot of people are thinking, because winter is coming, right? Yep. So winter is coming. Oh my goodness, the demand is going to spike. Natural gas should be going up. But the price action is actually weakening here, which is actually a very big positive, hopefully for Europe for the winter here. So I'm very hopeful that price action dictates reality here and leads it down. But you can see this little trend line. This is what we would call a head and shoulders pattern, which is a bearish pattern. You can see a shoulder here, head and shoulder. And then here's your break point. And this actually could trade down to $5.50 on natural gas, which would be awesome for Europe and for the rest of the world.
Well, it would be, but it doesn't make sense to me because I guess the demand for natural gas is massive. So why is it going? Your view is it's going to go lower. To me, my brain is saying that doesn't make sense.
Right, and that's the amazing thing about the charts is the charts will dictate what will happen, but a lot of times it's hard for us to kind of grasp. The only things I could say is maybe the charts are already understanding that there's going to be maybe Russia. We know Russia's now deploying more troops. I mean, they're struggling here. Are they going to potentially open up the pipeline because they need to bring in more money? I've heard that China's getting a little bit more hard on Russia as well. So, I mean, it's very possible that the natural gas market is sniffing out things that we may not even know yet in the political atmosphere. And we'll just have to wait and see. I mean, that's the remarkable thing is we could look back at this and be like, wow, yep, the chart told us that, but we had no clue.
Isn't that fascinating? All right, Gareth, let's go on to my favorite subject. You know what's coming.
I know.
It's called, ladies and gentlemen, it's called real money, not currency. So I'm very interested. I know that the gold price had a little tiny movement after Powell's announcement, but not enough to even get close to what we thought earlier this year would happen with the gold and the silver prices.
Right. So you're right. So the number one thing is the dollar spiked today and gold was still up. And so that's a interesting kind of development. My guess is that happened to do with Putin threatening nuclear weapons, deploying more troops. So it's the safety play that we all have grown to expect from gold actually working today in terms of why gold went up. Now, the question is, if the dollar keeps going up, it's going to put pressure on gold anyway. So the one thing I will say, and again, so I thought gold would be much, much higher at this point during the year. The only thing I could say is that it's still an amazing performer when compared to the S&P 500 and Bitcoin, which are down huge on the year versus a small loss on gold. And the other thing to keep in mind is that if you look at gold in terms of euros or in terms of yen, gold is actually performing amazingly well. It's just that the dollar has gotten so strong that it's just put so much pressure on gold. And the other thing I would just say as well is that if you think about it, so the dollar, let's say, is up 17% on the year. Gold is only down, I think, about 5 or 6% on the year in terms of dollars. And for me, I would say, okay, if someone told me the dollar was going to be up 17%, I would say, well, then gold should be down 17% on the year. So you could look at it like that as well and say, wow, the fact that it's only down 5, 6%, that means it's outperforming and there's actually accumulation going on here in the metal, which does bode well for whenever the dollar weakens in terms of, so whenever the dollar pulls back here, you should expect a big move up in gold as that kind of headwind will be taken away.
Is the dollar going to because to me, it goes back to my comment before about the dollar milkshake theory and Brent's comment. I mean, he said the dollar is just going to continue to just be stronger for longer. Can you see any what would be the catalyst? I go back to that again. I can only see the dollar getting stronger and stronger and all these other currencies out there weakening against it. And the more and the stronger it gets, it's almost like it gets this tailwind behind it and no one wants to pull out.
Right. And I think that's true. I think you have an overcrowded trade long the dollar, which right there is something that would be concerning to me as an investor. And again, I think the only thing that's going to kind of trounce the dollar is if we see that Fed pivot, because as soon as the Fed pivots, then we go from them aggressively tightening to them potentially the market will start scoping it out and say, okay, well, if they're pivoting here, and the economy continues to weaken even more after that, then eventually they're at 0 hikes. Then maybe they're even reducing, which would then weaken the dollar as they go that direction. And I think even if you see the economy weaken enough, they'll stop the QT, the quantitative tightening, which would then also weaken the dollar. So it's going to take some economic data to kind of push the Fed's hand, but that's really the only way I see it happening is if we do see that economic data weaken and then forcing the Fed to pivot.
What does a Fed pivot look like?
Wow.
Are we talking backing off from raising rates? Are we talking about lowering rates? A lot of people are saying that the rates will continue to go up this year and into next year, and that we should be prepared for a 6 to 7%.
Wow. I mean, I couldn't even imagine if we're at 6 to 7%. I mean, where's the economy at that point? Ooh, that's scary. I think the Fed pivot is going to happen a lot faster than people think, mainly because I see it every day. And you know, I follow the stock market quite closely, and almost every day we're seeing, you know, new companies, you know, publicly traded companies saying, hey, we're going to lay off 10% of our workforce. We're going to lay off 20% of our workforce. You know, I think Snapchat said that, and a bunch of other companies have said that. And what that tells you is that it's coming. The wave of unemployment, of hike in the unemployment number is definitely going to come. And I think as soon as you see that start to rise, the Fed will back off at that point. The Fed right now has to talk a tough game, because if they show weakness, number one, the market already had lost credibility with them prior to this. So the Fed is trying to reestablish control or credibility. And so they really have to talk a tough game. But as soon as that economic data weakens, they're going to back off real fast, because they know deep down that if we go into recession and it gets bad, they can't save us like they used to.
Gareth, you've always been, I'll say this, pardon the pun, you've always been on the money, in the money. What do you think people should be doing right now in these markets? Because right at the start of this conversation, you said today has been a wild day, 3% up, 3% down. Who knows what tomorrow is going to bring? That, you know, for me, I'm sitting here talking to you going, I'm crazy confused.
Yeah. I mean, I think you're not alone. I think after today, you know, most investors should wait for the dust to settle before really making, you know, investment decisions. But I do think that panic selling, if we get a few days of this, can bring up opportunity. And so for me, it's looking at good quality names that have been overly punished in the near term. And that's more if you're a swing trader where you want to get in and maybe sell in a couple of weeks for a 5-10% type gain. And the only other thing I would do is, you know, there's nothing wrong with holding cash right now. Yes, you have inflation, but you also have a strong dollar. So your buying power is doing decently well here. And then the other thing would be is just look at the metals, look at gold. Think about at some point that dollar does pivot down, and you're getting gold much lower than you could have gotten it earlier this year as well. So there are some opportunities out there, but certainly be careful. There's nothing wrong with being in cash and just waiting patiently for the dust to settle.
Well, there you go, ladies and gentlemen. Gareth just said, be patient. And I've heard this from other people as well in this crazy swinging market. Unless you're a swing trader like Gareth, be careful. Gareth, how can people get involved in your community and basically look at you and go, Gareth, just tell me which way to go, left or right?
So Twitter's a great place to find me. At Gareth Soloway is my handle there. And then inthemoneystocks.com, I have a service there for stocks and commodities. And then verifiedinvestingcrypto.com is for cryptocurrencies. So we cover the gambit there, and I do my best to put out a video each and every day going through the technicals of the chart, the probabilities of different scenarios, and kind of all the hardcore stuff out there.
Well, Gareth, I'm really pleased that we decided not to do our conversation yesterday, but to do it today. You said when I was talking off camera to you yesterday that your view was it would be a 75 basis points hike. You were once again on the money with that one. But as you said, it's created enormous amounts of swings in the markets. Who knows what tomorrow will bring? Let's bring you back on in the near future, because I think right now it's a crazy time. Thanks for joining me on Small Caps today.
Thank you so much for having me. Have a great one.